We looked into Prime Minister Mark Carney's investment disclosure, and what we found might surprise you, especially if you own Canadian bank stocks. In Values, Mark Carney writes that how we invest is one of the clearest reflections of what we believe. His recent ethics disclosure gives us a rare look into what the former central banker and CEO believes about risk, opportunity, and where the world is headed. Let's be real. Depending on your politics, Carney is either a globalist shill or an economic realist. That means that those on the right see this disclosure as a quiet indictment of Canada's future, while those on the left see it as a pragmatic blueprint for navigating change. Look, we're not taking sides. We're asking a different question. Here it is. What can you learn from a portfolio that's been frozen in place, not for optics or politics, but out of conviction? You see, Carney reportedly placed his investments into a blind trust, but he didn't liquidate them. At least according to Democracy Watch, a respected nonpartisan group, he instructed the portfolio to be frozen. So look, if this is true, these holdings aren't just placeholders. They're positions of conviction, and that makes them even more worth studying. So let's talk a little bit about 3 lessons from Carney's holdings. Lesson number 1, don't bet against disruption. Carney owns 0 of the big 6 Canadian banks, which collectively make up almost 30% of the TSX. Look, it is hard to overstate how damning an indictment this is of Canadian financials. Remember that Carney will be intimately familiar with these bedrocks of Canadian finance. His allocation? Nada. Zip. 0. In effect, this is a huge short position relative to the Canadian stock market and economy. More amazing still is that Carney owns the Fintech disruptors like Stripe and Adyen, companies that challenge the traditional bank margins. It seems pretty clear who he favors winning. And listen, that's going to come as a shock to Canadian investors who traditionally overweight Canadian bank stocks in their portfolios. Lesson number 2, avoid home country bias. Out of a list of approaching 600 securities, less than about 20 are Canadian. That's less than 4%. For investors used to anchoring their positions in the TSX, that's a reminder. Diversification isn't disloyalty. Look, to be clear, we don't know what his percentage exposures are, but based on the breakdown of investments, the disclosed bias is towards US and global names, not Canadian. Lesson number 3, own the enablers of the energy transition. Here's another surprise. Carney doesn't own any headline-grabbing solar or wind stocks. And that may come as a surprise given his book Values. More shocking still, I suppose, is the disclosure that he owns fossil fuel companies like Canadian Natural Resources and Teck, who only divested of their coal business recently. It seems that Carney invests as a realist. He owns companies like Schneider Electric, Eaton, and selected copper miners, firms that build the backbone of decarbonization. And that's the point. This is not a portfolio built for headlines. It's one built for underlying change. Look, whatever your politics, this is a thoughtful portfolio, measured, globally diversified, and focused on structural transformation, not short-term sentiment. Let's talk about what this means for investors. In this hyper-partisan environment, it's easy to dismiss a disclosure like this through the lens of politics. Your investment portfolio isn't the place to score political points. The stakes are just too high. And that's what Carney's disclosure offers Canadian investors, an informed technocrats expression of his values. So look, whether you agree with those values or not, that's your business. Our business is to learn, research, and to adapt. We're not political hacks. We're investment realists. And in regards to your retirement planning, that should be the only thing that matters. For Canadian investors nearing or in retirement, the lesson is simple. Don't confuse patriotism with portfolio strategy. Or, for that matter, words with actions. The world is bigger than the TSX, and the future won't look like the past. And by the way, that's not something to fear. That's where the opportunity begins. I'm Glenn Evans from Evans Family Wealth. We're here to help.